The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 17th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Please, in the subject heading, just put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Let's Show. Right now, the Dow down 32 points, 24,736. S&P completely flat. She's trading at 27.22. NASDAQ 100 off 17. Russell, strong Russell, breaking out in every currency around the world, all the major currencies. That's what we really should say. So that if you want to know where the money is flowing, all you have to do is look to the Russell 2000. Up 8 points, trade out at 1624. Semis are off 3. Trannies are up 79. New York Stock Exchange up slightly. NASDAQ Composite off a bit. Spot Volatility Index is flat-ish. Trading out at 1336. Gold back $2. Silver up 10 cents. Light sweet crude back 13 pennies. She's trading out at 71.36. Leading the charge dollar-wise, the upside. Loxo Oncology, $25 or 17%. Booking Holdings up $17. That's less than 1%. Bluebird Bio up 5% or $9. Now, how am I going to pronounce this? Bausen, B-Z-U-N. Yeah. Well, that's up 18%, or 8 buckaroonies out there. World Wrestling Entertainment is up 15% or $6 and change. To the downside, it is NetEase, nearly $17 or 6% to the downside. Children's Place down $11. That's about 8% to the downside. Sage Therapeutics up down 9 and change. Blueprint Medical off 6. So we've got some things to look at. Of course, I want to look at what you want to look at. And the first question that came in was from Justin. So, Justin, thanks for writing in. Thanks for putting radio show question. Just makes it so easy. And Justin, yesterday, became a farmer. Yep, he became a farmer. Why does Stevie say that? Well, I say that because what Justin invested in was the ticker symbol WEAT, and that is the Tecrium Wheat Fund. And what Justin would like me to do is take a look at it and give him my take. Now, that's a challenge that I'm probably not up to because I am not a farmer. What Justin needs to know, and what you would need to know if you want to follow suit with Justin and invest, now he's long wheat out here, is that you have to become a farmer. You see, what you want to do is you want to make sure you understand exactly what is behind these ETFs. It's not as simple as just, for example, following the current the current wheat contract. In the case of the Tecrium Wheat Fund, WEAT, and let's see here, I had gone online just before. Let me see if I want to make sure I get this correct. It has 3 equity futures contracts in it. No, it has 3 commodity futures contracts in it. I believe it has July, September, and December. And that's why I say you have to become a farmer, because you have to deliver And each of those expiration dates out there, right? A futures contract, you're paying for something now for delivery in the future. So in essence here, you're buying at these prices with the anticipation you're going to be able to sell it for more money when you have to deliver out here. It makes it more complicated to go follow each of, and really it is those future contracts that Justin has to become a master of. Now, I'll help him as best I can, but it's a tough road to hoe. This is look, being a farmer is a tough way to make a living out there. Being a futures trader of wheat, quite frankly, maybe even more difficult. Let's go take a look at it. Here, if we take a look at the, and if you look at the bottom left-hand side of my screen, you'll see the 3 different futures contracts that are a part of the wheat Tecrium ETF out there. You've got the July futures contract. That's trading out at 502.20. You've got the September at 517.60. You've got December at 538.60. And oh, by the way, the weighting, just to make it even, I don't know, maybe I guess easier, it's about 30% each. I believe that July is 35%, September is 30%, and December is 35%. At least it's somewhat equally distributed out here. But here, if we take a look at December and we just take a look at our market profiles, they're going to provide us with data that's different than the July, and going to be different than the the September. See, I'm so confused. It's so hard to do. I get confused about which contract it is I'm talking about. But in the case of December, as an example, we know that price went ahead and hit a ceiling level, the top of its task market profile. That's the very right-hand panel of my screen out here, 562.20 inside of the futures contract. When I switch over and I take a look at, so what do we know about this? Price could travel in between where it has resistance, maybe even the point of control, the 521-ish area, could get all the way down to the bottom of the box at 497. Now, why are we suggesting, why am I even taking a look at lower prices here with regard to the December wheat futures contract? It's really very simple. It's because price is trading below the bottom of its daily box out here. It's trading below the daily box. So I know you went long, Justin, but in this case here, as I take a look at the December contract, very possible that it's going to go lower before it goes higher, and that's about 1/3 of your weighting inside a WEAT. If we go take a look at the September contract out here, actually the same scenario. The same scenario. Now, maybe it found support at the center of the box on a weekly basis. But if that's the case, you're going to see price get back above the bottom of the daily profile out here. Okay? So we don't have that condition just yet. I know you went long this. If I take a look at the July contract out here, where are we at inside of July? We have the same message out here. Let's see. Go ahead and populate the weekly. We have a slightly different message. Here you've got a conflict. Not a conflict of interest. Well, a conflict of interest because it's your cash that is riding on this trade out here. On the daily profile, you're down below the bottom of its box. But on the weekly, you're above the top of the box. Which one's telling you that you'd like these to sync up here? The bottom line, we haven't even taken a look at WEAT. And I know you wanted me to do that. And I will do that when we get back from this break. The thing that's most important is that this is a very complicated trade. And if you and I just take a look at the ETF itself, we're going to get bamboozled because it's not about the ETF. It's about the underlying instruments. We'll be right back. One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, Justin, we're taking a look at the Tecrium WEAT, the ETF. And what I've done for you here, before we go take a look at the ETF, and I try to give you some type of feel as best I can. But, I like to provide good information. In this case here, it's going to be really qualified with, I don't know. I mean, I'll give you what I can. But here, just take a look at the wheat contract. Now, I've got the continuous contract on the top portion of my screen. It's a weekly time frame. This way you can see the correlation, and sometimes when really the correlation isn't there. What I mean by that is if you go take a look at the yellow line from a perspective of a continuous contract, out here, you'll see that the wheat, in essence, the commodity, went ahead and bottomed December the 19th out there. But if we take a look at the ETF for wheat, WEAT, that's really not the case out here. You can see we're trading well above, from a continuous contract basis, well above that low from back in December of 2016. You cannot say the same thing about wheat. And look, it comes with a significant cost if you're going to trade that ETF. Nearly 2% is the fee for trading that ETF. It's 1 3/4% out there. So it is not an inexpensive, process. Once you've got into this, you've got to get that 2% back, or 1 3/4, just in essence to get to break even out here. So back to wheat and try to answer your question. All I can really do is to caution you like I have thus far. Make sure you know what it is that you're trading. I do that just simply to really assist you, really assist you. And if we take a look at what is the ETF itself doing, and we're taking a look at the daily box prices below that, doesn't help us a whole lot out here. If I take a look at wheat on the weekly box prices slightly above the top, and on a monthly standpoint, you can see that okay, the bottom of that box at 606 ought to be support, and maybe this can get a rise up to the 764 level. If I take a look at the ETF itself, On my chart out here, my Ninja Trader chart, we're going to see the price below Stevie's red line, 668. So this says we have a falling price oscillator. You have a hammer candle on this ETF that formed a couple trading sessions ago. If you get below that, you know the expression, if you're long, you're wrong, which would mean you go back down to the most recent swing point out here, the prior swing point. That would be the April 25th target. Is that what it's going to do? I don't know. If I put this on a weekly time frame chart out here, and that is WEAT again. Let's see what this is doing. This says, hey, you know what? You could pull back into the 641 level, and that would be just fine out here. So, you know, best of luck with that trade. I wish I could provide you with more, better information than I can, but maybe what I provided you with, unless you're a farmer, you might want to consider placing that money someplace else. All right, we had a ping that came in that said the NASDAQ daily, I believe, time frame was holding up pretty well. Didn't say, not just said the NASDAQ, the NQ, I should say. So let's go take a look at the NQ, see if we can figure out what the heck is going on. Here, I think I can give you some better information. So give me a second here just to go ahead and change my screens, and let's pull up the daily. Well, we're going to do this on a multiple time frame out here. Let's pull up the daily NASDAQ futures contract out here. So we're still staying in the futures world, but here we're just switching to the equity futures. Now, this made, from a textbook standpoint, we'll see how this plays out, but from a textbook standpoint, this made the perfect Gartley sell pattern. This is the pattern that was worth the price of admission to HM's book out there, HM Gartley. In this case, you had a big kibosh. He didn't actually use that as a frame of reference, but what he did say is he had a big move from the highs out here in March 13th, when the NQ made its all-time high. Makes a nice move down, if you want to say it's a nice move, into the bottom on April the 4th. Then it makes an A to B equals CD to the upside. That's what it did on the trading day of May 14th, this week. Now, why it's textbook, HM didn't have this in here. If his book was worth the value of an F-150 then, what I've added to his pattern makes this worth a Rolls Royce. Because you see, what HM didn't understand about the A to B equals CD pattern was where is it that it gives you the highest probability that that D point is going to stop out there. Voila, we take advantage of today's technologies and tools and so forth out there, and you and I know it's all about understanding our bullish and bearish reversal candles. And if you don't, and you trade patterns, you've got to go learn to do that. You can go read through books all you want, and you can do by trial and error. That's one way to learn out there. Or you can let me assist you with that, because all subscribers right now on their members page have a workshop, great workshop, that'll just cut to the chase and show you exactly which candles you want to follow, how to actually go ahead and use them. So if you don't understand Japanese candlesticks, just like that, by coming up and signing up for Mastering Probability, you can do that. Now, you had a shooting star. Let's get to the point here. You had a shooting star that formed on the 14th, 4 days ago. Then you had follow through to the downside. That's what you like to see. You like to see follow through. Yesterday we had a bounce. That was to be expected. Today we've got sideways movement. What's going on inside the NQ right now is Stevie's red line and price are going to catch up to each other. What I don't know, is we're just going to move sideways and let Stevie's red line move up towards price, the bottom of which, if we get a test and a rejection, then the NQ moves higher, and this Gartley sell pattern will not have worked. It's nice to be able to have a frame of reference out here. But I see we have a caller. So we'll come back to the Gartley sell pattern inside the NQ after we go out to Pat in Massachusetts. Pat, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
Excellent. Now, what is the symbol that you would like to look at?
It's Kennedy Growth Corporation, and it's TSH.weed.
What's the symbol?
It is, I have two of them. One, because it's listed on the Canadian stock market. So what I have here is CA-weed.
Yeah, so I don't have the Toronto Exchange. I'm sorry about that. So I'm not going to be able to pull that up.
Oh, I see. Okay. All right.
Bummer. Are you in Canada?
No, I'm in Massachusetts, but it's going to be listed on the NASDAQ at the end of May.
Is it? Okay.
CGC.
CGC?
Mm-hmm.
Yeah, let me see if there's anything in the system on that. Yeah. No, nothing yet. Oh, I'm so sorry. Yeah, I don't have. I mean, I could go out and pay for it and get the exchange data, but I don't have access to it. So I really. What does it do? What sector is it in? Is it in the
marijuana.
It is.
Yeah.
So, are you invested? Somebody's giving me one. So let me see if I can try this. Are you invested in any of the other exchange-traded products currently in the U.S. that are pot-oriented?
No.
No. We're about to go to break. Why don't you hold on? I'm going to go ahead and try to pull up a couple of symbols, and then we'll come back to you. And if not, then we'll talk about something else.
Okay. Thank you.
All right. Steve Rhodes with TFNN. Dow's up 25. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Pat, during that breakout here, one of our guys in the Tiger's Den gave me a ticker symbol TWMJF. On my system, it shows up as Front Technology Solutions. He's getting that information from stockcharts.com. But I'm hesitant to really evaluate this chart because I don't know for sure, and I can't figure out if we're looking at the same thing. So I would ask you to do this if you'd like. You could send me an email if you have a copy of the chart, and even from that, I should be able to read into it, and then I just respond back to you by email if you'd like.
Sure, that's great.
That'd be one way. So just send it to Steve at TFNN.com. Just put radio show question and, dash Pat, and I'll remember what it is. And when I'm off the show or, within the next hour or so, I'll respond back to you and just try to give you a feel. Are you looking at it as a long-term holding? Tell me what you're doing with it, too, what you want to do with it.
I wanted to see what the entry point was.
Entry point. Oh, okay. Yeah, send that off to me, and I'll be happy to take a look at it. I wish I could do it for you right here live, but I can't. But we've got game plan B. Okay.
All right. Thanks, Steve.
Is there anything else you'd like to look at? As long as you. No. Okay, great. Okay, so do that, and thanks for the call. I appreciate it.
All right. Thank you. Bye.
You bet. That was Pat in Massachusetts, and we'll try to get that all squared away and figured out. So we were taking a look at the NQ. Let's just go back to that out here. I don't see any other questions that have come in by email or otherwise. And so we're taking a look at the daily chart here for the NQ. So we know that it has formed a bearish, or maybe you don't know, but it confirmed a bearish or a Gartley sell pattern is what I should say out here. Now, I've also learned by applying a couple different sets of tools out here. Really, the whole idea for me, I don't know about for you, I think we are all programmed to figure out why something doesn't work. When something works, you don't need to spend any time on it, right? It's about trying to find a solution for what something doesn't work. If you're an athlete out there, you're figuring out what doesn't work in order to pick up your game. If you're a trader in the market, you're an athlete. You're an athlete. In this case, sometimes some people want to be long-distance runners. Some people want to just do the 100-yard dash, right? That's the type of traders. That's why I asked the question, what's your time frame horizon out there? Because when we understand what that is, then we know what time frame chart to go take a look at. We're looking at a daily time frame chart here for the NQ, which has definitely generated and completed a bearish pattern. The last piece of this, in order for it to get bearish, is going to be the test of Stevie's red line. Again, that's at 68.70. Now, if price gets below that, it doesn't mean that it's global thermonuclear war. It means that we're going to see lower price. And if we say lower price, we're likely going to go down in towards that May 3rd session, which was a nice little hammer candle. It's a junior type swing point, because the real swing point out here would be the C point of this A to B equals C to. That would be the April 25th area. So price-wise, if price were to close below Stevie's red line, that would become the target out here. Whereas if price tests and rejects, and I don't know if it's going to be by moving sideways, Stevie's red line will move higher, or it's just going to be a flush and a push down in price to go test that level. But that's what's going on inside of the NQ. Once we see that test, then you and I will be able to, because if we see price bounce off of that line, you've got a rising price oscillator above zero, competing against the bearish pattern, and as soon as that shooting star gets taken out, you're back to the all-time highs one more time out here. That's what's going on a daily chart for the NQ. On an intraday time frame chart out here, Stevie will have to change his screens one more time, but that's no problem. The one that Stevie is taking, that is paying most attention to, you and I talked about this yesterday, and is the 5-hour time frame. Because in the 5-hour time frame, when it made its top out here, it did so with the type of pattern that has been beautiful at calling tops and bottoms, in this case here, tops. And it did this on May 13th, did everything that it was supposed to. Yesterday was a bounce back to where, on a 5-hour time frame chart, right to the T, Stevie's red line. And that has acted as resistance. Even so far today, the candle session completes at 2. So if you are on a 5-hour time frame chart, you've got to let the entire 5 hours play out before you can make a call. At this stage here at 135, all we can say is price tested and rejected Stevie's red line. Says that price is going to or should continue to fall out here. Now, the A to B equals CD pattern that I had up there, that has to be redrawn. The market's always giving us new information, so sometimes we just simply have to redraw our patterns out here. And what we can see is that it's made a 67% retracement. That was the high so far today. Price still below Stevie's red line. If price is going to make the A to B equals CD run out here, which at this stage of the game it should do, it may only move down to about the 68.04, 67.61. And you'd have to go back to that daily Stevie red line number to give you a real feel as to where price is likely headed to. Now, that will take place if we see it close today, tomorrow, on the 5-hour time frame below 68.70.18. That's the bottom of its profile. So we know that there is a zone that price is trading within that hasn't been busted to the upside or to the downside. And that zone is Stevie's red line, 69.40, 69, let me give it to you, 69.4609, with the bottom support, that's resistance, support 68.70. Just use those figures out here. Price gets below 68.70, you're likely to make a run down to the 68.04 level. So holding well, yeah, it is. But really testing and rejecting resistance, Stevie's red line here. So we know where the sellers, in essence, are lined up inside of the NQ on a 5-hour time frame, and we know where support is with regard to the different time frames that we are looking at. Whew, that was a lot. Now, what else do we want to go look at out here to look for information? In fact, and stick with the NASDAQ 100, right? Because we've got to complete our thought out here, even though my thought might be a extended thought out there, but you've got to be thorough, man. And so we're going to take a look at what's the likelihood that that Gartley sell pattern could actually take hold out here. And right now, you and I would look at this chart and say, it's a pretty good chance that it could really take hold. And we see even a bust of Stevie's red line on the daily time frame. And the reason is this. What you and I are looking at is two different ETFs, the QQQ series ETF, so in essence, the NDX 100, and the equal weight. At the top of my screen is the equal weight. And the equal weighted ETF is the one that you want to pay attention to when divergences arrive. Well, guess what? We have divergences because in this case here, let's actually show it. Let me get rid of that and put it up here so that you're not looking at it dumbfounded like you should be based on the way that I had that drawn in here. But here is our divergence. We can see from the swing point out here from April the 18th that price was moving higher, took out the swing point. But what you go take a look at what went on inside the equal weighted ETF, each time it's tried to get up to that level being 60.46, it can't close above it. And until it closes above it, you've got what we'll refer to as a bearish divergence because it is the equal weighted ETF that is painting the way. And it suggests we're going to see prices move lower. That's the reading at 138. If it changes at 140, I'll let you know. Until then, it looks like the pressure is to move downside to Stevie's red line. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to New York City and speak with Maria. Maria, thanks for calling. Thanks for holding. How are you doing today?
Hi, Steve. How are you?
Very good. Thank you. Thanks for asking. So how can we help you?
Yeah, well, you help me every day, Steve. So this is just a matter of another help I'm asking. It's just I'm trying to improve a bit my understanding of those markets. And, you know, you mentioned the red line and everything. So I was wondering, this morning, you know, like Stevie's red line on the daily on the Nasdaq was around, I think, 69.45 or 47, I can't remember. And the price oscillator was green, right? And
yes,
the
above zero.
Anyway, above zero. And the market cruised through it and went all the way to 69.63. And that was more or less the 61.8% retracement. So at one point I was thinking, okay, it's going to go down again on the BC day, but at the same time we are above Stevie's red line, the daily one, and the price oscillator is positive. So is it the right position to be short the Nasdaq at that price at 69.60? And I was wondering if it's because the Stevie's red line is valid on a daily. So I mean, basically, I have to wait for the end of the day to see where my Nasdaq is to know that it was a test and a rejection, even if it tested and cruised through it and went back down, or
right.
If it's I should look also at your equal weight and at other indicators to make sure that I'm making the right decision at that point if it's above the red line.
I think that the best way that I can answer that question and is to stick with the 5-hour time frame chart for the NQ. You know, if you and I knew at the beginning of the year that the NQ on a 300-minute basis was the only thing that we needed to trade to make bundles of money in 2018, we would have loved to have had that piece of information. What we know now, though, and we learned a month ago or so, and that's what I have up on my screen right now is a 5-hour chart, was that it has provided, based on the tools and the patterns that I use, that I share with subscribers in here on the show each day, that it has been the most consistent at identifying tops and bottoms. And so, as you know, on this 5-hour time frame, the most recent signal came in at 5:15 a couple of days ago. And it did that because we saw that bearish engulfing candle. Plus, at that time, price was below Stevie's red line. So what took place today, intraday, and it's because it's a 5-hour time frame chart, I really have to stay with the 5-hour bar and wait for it to complete. So the bar that we're in right now completes in 15 minutes at 2 p.m. And what it did was it tested that oscillator and change line, Stevie's red line. Right now it's priced at 69.44. You and I know it will fluctuate up and down a bit, but it's held as resistance. And as long as this holds at resistance here, this says from the 5-hour time frame chart, which has provided the best tops and bottom signals, that this says that short is still in effect. And you would have wanted to maybe have sold, earlier as price was moving higher, and you were taking a look at a retracement level. There was nothing on a daily time frame that would have given you a signal to sell into the NQ, because even if I go take a look at the market profiles out here, there's no market profile that price was running into, a couple of hours ago. So I'm sticking with the position that the NQ still wants to pull back. To what level, I'm uncertain of just yet. The one level that I feel confident that we're going to see is that daily chart that we looked at. And that right now, the oscillator on change line is priced at 68.68. So somewhere between where we're trading right now and the 68.68 is where price wants to go back there. And the reason why, Maria, I think that it wants to go back there is you and I could pull up basically every index chart and see that that's the test that we're waiting for. The weakest of the indices out here, I believe, is the is the Dow. And I'll put that chart up on my screen. Is that okay if I put that up on my screen too, just to take a look at that with you?
Mm-hmm.
Okay.
That'd be great.
So, yeah. So what we're going to do here, because if the market, I don't say falls apart, but if it confirms that the sellers are still around and they want to drive price down, I believe that what we want to do is look for the weakest link out here. I'd suggest we look at the weakest possible link out here. And I believe that is still the Dow. Now, I'm going to pull up the Dow chart. And the reason I say that is its price oscillator is really just above the red line. So the reading is 29.41, whereas like in the NASDAQ and other indices, it's well above that level. When the price oscillator is above zero, but the price is below Stevie's red line, it just says retracement. It says retracement, or it could have been a significant high. But here in the Dow, as price meets that red line number, which is 24,546, if the Dow pushes below that red line, this price oscillator is going to turn down below zero. And when you turn down below zero, it just doesn't get much better than that for the shorts. That doesn't mean short forever. It just means that price, the side of the trade that you want to look at is the short side of the trade. So I would have one eye on the NASDAQ and one eye on the Dow right now to try to get a larger interpretation of what the market wants to do. And one of the reasons for us to take a look at the Dow itself is that money around the world is not flowing into the Dow. We know that money around the world is flowing into the Russell 2000. That's why we see this divergence with the Russell moving higher and the other markets, we're moving lower out here. I just have to try to give me a second here to pull that chart. And we know that. We know that unequivocally that money around the world is pouring into the Dow. And this is a one world type market out here. And here's the proof of that. Because in all major currencies, so the euro, the yen, and the Great British Pound, as well as in the U.S. dollars now, we are above the January swing point high. And so any trader in any of these countries that is a momentum trader is looking at their screen saying, I want to buy a breakout. Where's money flowing into? Yeah, it's currency conversion, but it's what's real. It's real. It's really what's going on. Whereas if we try to go look at the Dow, priced the same way, give me a moment here to pull that up. What we're going to see as soon as I can post that on my screen out here is the Dow, which is really the trophy, the big trophy. It's where the big money players want to be. It's not breaking out. It's not above its highs out here in any type of currency. Let's see, this shot of pulled. Here's the Dow. So if we take a look at the Dow, well below its January swing point of 26,616. It's well below the swing point in euros of 21,461. Well below in terms of yen, and well below in terms of Great British pound. So this is just very clear to us that where money is actually flowing into. So if you were going to take a long position, because of your interpretation or my interpretation, I'd say you'd make it in the Russell 2000, not the NASDAQ, you know?
Yeah.
So
it makes sense. Okay, no, I understood now, because I was getting confused between, the red line being tested and it went exactly above, and the fact that the price oscillator was positive. I was like, okay, I'm going completely crazy.
Hey, stay on through this break. We're going to go to a break right here. Stay on, and we'll finish it up when we come right back.
Thank you very much.
Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, Maria, who's asking folks, is asking really some great questions out here. And we're really focused on the NASDAQ. in summary, Maria, because of knowing that the 5-hour time frame chart for the NQ has provided us with the most consistent signals, that was the reason to go ahead and take a short position as we did this morning. But knowing that, and I wrote inside the newsletter, this could be a very short-term trade out here. Not from the standpoint of wanting to get stopped out, but that once price gets down, once we see price and on the daily chart, the oscillator on change line, catch up to each other, then we really have a decision to make. And we'll just have to look at what goes on some other charts, preferably the 5-hour chart, to try to make some type of interpretation out here. The reason that I chose the NQ to go short this morning was because that, in essence, is where the signals were coming from. If we see signals that say that prices want to continue going even further lower, then we would add a position inside the Dow, assuming that price got below its daily oscillator on change line. That would be my thinking. At least that's what I would present to subscribers out there on the action that we should take.
That's wonderful. Thank you very much, because at least it clarifies what I had in mind. So it's perfect. Thank you so much for taking the time.
My pleasure. Thanks so much for calling. So, folks, we're about to round things up here. We've got about 30 seconds. And, hey, look, if you get a chance and you want to expand your toolbox with regard to the tools that I speak about here, you've got the opportunity to sign up for a webinar that I'm doing next week on Wednesday. But more important than that webinar is the entire set of tools that you get. And right now, if you aren't that familiar with Japanese candlesticks, start there. So you've got a great hour there. You've got access to me. You're going to have another great hour next Wednesday. I'm not underselling next Wednesday's workshop because it is just as important out here. But give that some thought. In the meantime, stay tuned, because your favorite polar bear, my favorite polar bear, David White, he's up next. After that, Tom O'Brien, and then Andy Heck from 5 to 6. I won't be with you tomorrow. My apology for that, but I'll be back with you on Magnificent Monday. So have a great weekend. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.